What's up, guys, and welcome back to our next episode of our Parliament of Pros, the weekly show where we dive into markets, we go over the top liquidity pools of the week, and we just kind of talk about what opportunities we're seeing in the markets. There's no Chris today. He is on vacation, so we'll have him back next week. So a lot of things happening in the market right now, a lot of monumental things I want to go over. We got the Bank of Japan raising rates. We got a lot of money flowing to the U.S. economy. We got AI inflation going on. We got Bitcoin just broke a key level. So I'm going to share my screen and we're going to just kind of jump straight into it because it's kind of got a lot to cover today. So per usual, I want to start off looking at the crypto fear and greed index just to get a pulse of the market. As we can see, we are at 15 extreme fear levels, right? Anytime we're at these levels, if you just trade off of the fear and greed index and you buy the lows and sell the highs, at least with Bitcoin, you're a pretty good trader. But a lot of people, including myself, think that we still have a little more down to go. Okay. And if we go ahead and take a look at the ETF inflows and outflows, we can see we just had a huge outflow of Bitcoin and Ethereum when it came to the ETFs. We had 469 million in outflows, 30 million in outflows in Ethereum. And we just been having consistent outflows pretty much for almost the past month. Like we had one day where Bitcoin had a 85 million, almost 86 million in inflows. Then we had a not even 10 million. And then we had a small inflow on ETH, but the rest have just been just straight outflows, which is, the supply and demand. So if we have more selling than there is buying, that means prices have to go down, right? We got a new Fed chair in Kevin Warsh. We talked about that meeting last week and how they're going more off of current data instead of extrapolating like Jerome Powell was. This was his first Fed meeting that he hosted, and it definitely spooked the markets because everyone was expecting him to come in and lower rates. But if we look at this here, we can see that now he didn't raise rates. They did pause them, right? Again, a lot of people are thinking that we're going to start getting rate hikes again, where we were expecting to get more rate cuts, right? If you go on Polymarket, last time I checked, the market hike percentages is around 44%, right? So we have PCE inflation up to 4%, the highest it's been since April of 2023. And it makes sense because we've been printing a lot of money, right? We're going to take a look at that M2 money supply, right? If we look at Japan, they raised their interest rates to the highest that it's been in 31 years. It's at 1%. The Bank of Japan just raised this interest rate 25 basis points from 0.75% to 1%. They haven't been that high since 1995. And it says this decision comes as other central banks have raised interest rates this year as the U.S.-Israel war with Iran has pushed up the cost of living. They've been closing the strats. We saw what happened with oil, and a lot of products go through ships and through these strats, and if they can't go, it shortens the supply. Then even if the demand just stays the same, it's going to push prices up because things that go on these boats are things that people need to live with. This is funding jobs. One person's spending is another person's income. And if people aren't spending, businesses don't have income, they have to raise prices. That goes on to consumers. And we're going to talk about that also happening here. But this is another thing here, and this kind of plays on the whole AI-Flation that we're going to talk about next. So we have U.S. net capital inflows surged to a record 884 billion in the past 12 months, ending in April 2026. It basically shows how much foreign capital that we've been having investing into the U.S. And it makes sense. Everyone wants to invest into the U.S. economy. Everyone wants to invest into AI. Most of the AI companies are here in the United States, right? If we look at the comparison, the 2021 peak was 400 billion. This is less than half of the current levels. All right. And we had the total private purchases of U.S. equities jump to 763 billion in April, an all-time high. All right. So the global appetite for U.S. investing is high. And I think it's mainly AI. And if we look here, demand of AI has caused chips to raise substantially. And now these tech companies are raising the prices on their products that use chips. Like we had Apple raise prices on Macs and iPads up to 25%. Right? Tim Cook said soaring chip costs made the hike unavoidable. And as people are saying, it's the first big sign of what they're calling AI-Flation, right? Inflation due to AI is being passed on to consumers. So the MacBook Air increased $200 to pretty much $1,300. The basic MacBook Pro increased $300. The Neo increased $100, iPod Air 150, iPod Pro 200, right? And then right after that, we look at Microsoft. They announced price hikes for their Xbox devices due to memory chip costs, just apples after Apple hiked, right? And they are a competitor. So these tech companies are competing against each other. So if one person raises, another person's probably going to raise as well, right? They had the Xbox Series S increase $150. The X increased $150. But pretty much $150. They raised their prices. I wouldn't be surprised if, ChatGPT or Anthropic starts to raise the monthly price of their AI subscription. Midjourney, all these AI products are using chips, using data. You know what I mean? It all ties back to those silicone chips. So now if we go and look at some charts here, we look at the central bank balance sheet, that's still rising, which means the central bank is still taking assets off of the market, which is good for the economy, but not good enough. We're still printing money. Like, this is just going up exponentially, right? $23 trillion in the system right now. We have gold still dropping, and we're finally about to get across from our 62 to our 200-day moving average, which gives higher confirmation that gold is in a downtrend, right? We are on the daily, and if we go to the weekly, we're still trending downward. So if we're in a downtrend on the large time frame, that shows the overall direction. But if we go to the monthly, it's we can't say it's in a downtrend. It just looks like a correction, right? A downtrend is lower highs and lower lows, and you can be in a downtrend on the monthly, but still be in the uptrend on the daily. Remember, this is like a ship. If the ship is headed north, it's headed north. But if you turn the wheel on that ship, it's going to take a while for it to change its direction, right? That rudder changes before the whole ship changes. So the rudder on gold has changed, but the entire ship hasn't quite changed yet, or at least fully. Okay. Like, we have the 200 still way above our 62 on the monthly, but if we go on the weekly, it's not way above it, but it's still above it enough. But we have the cross happening on the daily, right? That rudder has changed directions, and now we'll have to see if it stays in that direction long enough till the rest of the ship follows suit. If we look at oil, that's been dropping. Gas prices have been going down, which is good for, just everyday people in the economy. And then if we look at the S&P 500, we had $1 trillion leave the stock market in the past 24 hours, right? Because of everything that we've just been talking about. But we're still on top of our 62. We're still on top of this trend line. But a lot of people are calling for the .com style correction that we saw in the early 2000s, like the AI bubble to pop. Crypto is already in the gutter right now, or as people in Europe say, in the pan. If we look at the Dow Jones, we're still consolidating around all-time high levels. If we look at the NASDAQ, we're still on top of our 62 near all-time high levels. But if you just look at that, this strong pull upward, what goes up must come down. But, we've been saying that for a while. So while it is true, I would more so say what comes up must come down eventually. But that could last a long time. Like, you saw what happened you see what I just showed on the M2 money supply. They're printing a lot of money. So if they're still printing money, that money has to find a home. Capital likes to find a home. America is the sexy place to invest your money. As we just saw, we are in record investments of just foreign capital investing into the US stock market. So this could very well keep going, right? Apple had a huge correction. I'm guessing that this is off of everything that we just talked about and the fact that they're raising the prices of their products. We are below our 62, and we're seeing lower highs and lower lows. Apple is the largest or second largest company in the stock market. Nvidia is right up there with them, neck and neck. It might be more. Let's start look at some crypto. This is a cause for concern. Bitcoin is at a price that hasn't been since 2024. We officially broke the $60,000 level. All right, now if we look at the weekly, if we get a close below 60,000, like if the bulls don't come back in strong and let us close at 60,000 or above, that's a big psychological level. And I think that we would definitely go back down to 50K if we have this candle close below 60. Right now we're at 58.89. So we're not even at 59, we're at 58, right? So we're breaking we broke market structure. Okay. And we've been trending down for a while. We're on the weekly, we've been trending down. And even if we look at the monthly, we've been actually trending down. right? We have a high here, we have another high here, we have a low here and a low here. And this monthly candle, like we broke here, we retested it, we had a red candle close under the 75K level. So we kind of had confirmation that we're trending downward, and it closed right below our 200-day moving average. So the 200-day moving average, which is the average of the past 200 candles on whatever time frame it's on, and the $75,000, we closed below that. All right. Now we still are using our 62 as resistance, right? Which it was here. It was here. If we close below our 62, which would be below 50, that's a very, very, very strong confirmation that we have further down to go. And if we look at Ethereum, Ethereum's kind of just been following suit. We're at a $1,500 ETH right now. We haven't been there since April of last year. Okay. It's a really good time to buy up some ETH. This is why you always want to have some cash on the sidelines. And same thing, all these charts kind of look the same. And I bet if I go to stablecoin liquidity or volume, we can see that increasing. Yeah, so people are getting into stable coins. When this chart is going up, that means people are buying stable coins and selling assets. Okay, same with USDT, same with USDC. Okay, now if we look at DeFi Llama and just kind of get a pulse on what it's looking like in DeFi, you can see that we're at 69 billion, which is very small. The DeFi TVL kind of acts like an oscillator to Bitcoin. So if Bitcoin's going up, DeFi TVL is going up and vice versa. And if we just kind of look at the protocols, you can see it's just been outflows from DeFi. So when people are selling assets, they're also simultaneously pulling their money out of DeFi, right? Lido in the past month, 22% decrease, 13% decrease in Aave, even though they have the hack. So that's cool, or not cool, but understandable. Morpho 12%, Spark 41%. That's almost half of their capital people just pulled off. Uniswap 5%, not so much, but all you see is red here. It's just been straight outflows. I'm not sure what this product is, but they got 22% in the past month. Centrifuge, RWA has been doing good. If you look at the RWA TVL, and this is basically just confirming like, hey, people are still bullish on this space. A lot of building is still happening. RWA TVL is not an oscillator to the market price, right? As you saw with the Bitcoin TVL, it goes up. Or if you saw with the DeFi TVL, it goes up with Bitcoin, it goes down with Bitcoin. If we look at RWA.xyz, which shows the different RWAs and that are tokenized on chain, US Treasuries, commodities, credit, private credit, venture capital, private equity, stable coins, it's just been going straight up regardless of what's happening in the market. All right. So this shows that, hey, this technology is still the future. This verifies it. All right. And lastly, we just look at some of the pools here. This shows all the yields in DeFi in order. You can see some of the yields basically. Arrow and Coinbase Bitcoin, 1,200%. This is Arrow token and Coinbase. Arrow token has actually been doing pretty well. And I think it's because they're launching they're integrating their Velodrome and their Aerodrome DEX next month. They've been talking about this for a while, and I actually made a video on it and announced it in our community. So the yields in DeFi are pretty good. And the reason why is because people are pulling money out of DeFi, but people are still trading. So the people who are still in the markets are making pretty good yield, right? And all these pairs aren't super bad. If we just look at Wrap ETH and USDC, and we want to filter by yields, look at that, 200%, 182%, 136, 125, 125. That's not bad. I want to accumulate cheap ETH at $1,500. That's pretty good, right? And even if we go and look at our Tibber pool, where are we on Aerodrome? And the reason why you got to go to Aerodrome is because the Yield Hunter tool, we don't have it yet to where it shows the APR on staking. It's just on liquidity providing. So sometimes you have to go to the actual DEX to get a good idea of what the yield is, right? Been in this pool for over a year now, right? We've been talking about this since last summer. And if we look at the yield on this pool, and remember, we're staking. So the staking yield is dependent upon what the Arrow token holders are voting on. It's not dependent upon the DEX trading volume, right? That's if it's unstaked. Look at that. Yesterday it was over 2,000. Right now it's 873. 365 is over 1%. That's almost 3% daily, right? If you're just not, if you're not staking, you're getting 49%. That's still way higher than inflation by a large margin. But this is where you want to be, right? So DeFi yields are still really good, as you can see in blue chips and in some of our favorite altcoin pairs and the things that we want to accumulate while the market is down. So yeah, things are looking good. That's all I have for you guys today. Well, I hope you got value from this video. If you did, like, comment, subscribe, share with a friend, join our free community. All the links are in the description. And I will see you guys next Thursday for the next episode. Take care and trade safe.